The big story is the looming US government shutdown, a situation that has everyone on edge. It's when politicians can't agree on a budget, leading to a closure of non-essential services. This means many federal employees are furloughed and public services are halted. This Wednesday, October 1st, a shutdown is possible due to a stalemate between President Trump and the Democrats. Both sides are digging in their heels, making compromise seem unlikely. This isn't just political theater, it's a major event affecting the American economy. The uncertainty can lead to market volatility and economic instability. The disagreement over spending priorities creates uncertainty, making investors nervous. Stock markets can react unpredictably, causing financial stress for many. As the deadline approaches, the pressure builds, impacting Wall Street and Main Street alike. Everyday Americans are left wondering how this will affect their lives. The outcome will have consequences for everyone, from hedge fund managers to small business owners. The ripple effects can be felt across various sectors. It's a test of leadership, and the stability of the world's largest economy is at stake. Global markets are watching closely as the US plays a crucial role in the international economy. Pay attention, because this story is just getting started. The decisions made in the coming days will shape the future of the nation. When the government shuts down, it's not just the lights that go off. Vital streams of economic information are suddenly cut off as well. This leaves the Federal Reserve, the nation's central bank, flying blind without the crucial data it needs to guide the economy. Take the non-farm payrolls report, for example, one of the most closely watched indicators of economic health, scheduled for release this Friday. If the shutdown drags on, that report could be delayed or even cancelled. Without this key jobs data, the Fed is left to make critical decisions about interest rates with incomplete information, forcing them to rely on guesswork and assumptions. This uncertainty ripples through the financial system, making investors nervous. The JOLTS report on job openings, which tracks how many jobs are available across the country, suddenly becomes the last reliable snapshot of the labor market. Investors, traders, and analysts all depend on a steady flow of government data to make informed decisions. When that flow stops, fear and speculation quickly fill the void, making it harder to separate fact from rumor. The result? Wild market swings, sudden volatility, and a sense of chaos that makes confident investing nearly impossible for everyone involved. So a government shutdown isn't just a political headache debated in Congress, it's an information crisis that affects every corner of Wall Street and Main Street alike. The delay of even a single jobs report can disrupt the entire market, injecting a level of uncertainty that makes everyone, from big banks to everyday investors, uneasy about what comes next. On Wall Street, the phrase, "I don't know," is more than just unsettling. It's the most frightening thing you can hear when billions of dollars are on the line. The world is watching the American drama unfold, and global markets are reacting. In Asia, the mood is resilient, with the MSCI index up slightly. China's stock market climbs, but their economy struggles with contraction. In Europe, traders are cautious, waiting for clarity from the US. European futures show slight declines, indicating nervousness. In the US, futures markets flash red, signaling anxiety. A potential shutdown in the world's largest economy sends ripples everywhere. From Tokyo to Frankfurt to New York, traders are holding their breath. In uncertainty, investors flock to gold, which hits a record high. Gold is the ultimate fear gauge, reflecting deep concerns about financial stability. Meanwhile, oil prices fall due to expected increases in supply. OPEC plus production and resumed exports from Iraq's Kurdistan region contribute to the drop. New US tariffs on goods add complexity to global trade. Tariffs disrupt supply chains and raise consumer prices, inviting retaliation. This combination of events paints a picture of a global economy on edge. Gold's high, oil's slide, and new tariffs signal investor sentiment and economic health. Why should you care about these events? It's easy to think that what happens in another country or even in a distant city won't touch your daily life. But in reality, the world is more connected than ever before, and the effects of major decisions can reach you in unexpected ways. Because we live in an interconnected world where borders are blurred by trade, technology, and finance. What happens in one corner of the globe can quickly influence lives everywhere. Decisions made in Washington, Beijing, or Brussels create ripples that affect your wallet, your job security, and even the cost of your morning coffee. For example, a US government shutdown can weaken the dollar, making imported goods more expensive and changing the prices you see at the store. Your investments, whether in stocks or retirement funds, are tied to global companies that are directly affected by US tariffs, trade wars, and shifting policies. Market volatility means your investments can swing wildly, sometimes overnight, as global news and policy changes send shockwaves through financial markets. The health of the US economy acts as a global barometer. When it slows down, other countries feel the impact through lost trade, jobs, and growth. In many ways, we are all passengers on the same economic ship, moving together through calm and stormy waters alike. Confidence is key. When instability rises, it erodes trust, making people and businesses less likely to spend, invest, or take risks. This week's events are more than headlines. They test global confidence and shape the economic future we all share, no matter where we live.